Hey traders, and welcome to a special edition of The Trading Edge. If this is your first time joining me, my name is Akil Stokes. I am a pro trader and trading coach over at tier1trading.com, and today I have two subjects that I want to cover. Firstly, I want to give you guys an update on how my trading has been going. My last update video, I believe, was back in the end of March, early April, and always want to keep you guys in the loop, talk to you about the good and the bad of trading, crunch a little numbers. You guys seem to like that. I also want to follow up on the free training that I gave you guys about a month ago, right? If you didn't get a chance to see it, I'll throw a link in the description box below. But about a month or so ago, I released a free training called The Process of Trading. And it was a closed door private group, a look inside our closed door private group, and a lesson that I gave our traders about how to simplify traders, right? We were at a time where a lot of traders were overcomplicating things, and I broke down trading into really three different methods. So no matter what type of strategy or technique you use, it should fit into one of those three methods. And the training was a big hit. You guys enjoyed it. The feedback has been amazing. And what I want to do here today was follow up on that lesson and really show you an example of how we can use that knowledge, right? That basic foundational knowledge, and translate it onto the charts when actually looking for a trading opportunity. So what I'm going to show you is the trade of the week. We had an awesome call on the pound Aussie, and I'm going to show you how we track that trade from start to finish, starting with the initial trading edge video where we found the idea and when we said, hey traders, you may want to put this on your radar. Here's the area that you're looking for, and then take you through the next day in the live room where we actually looked at ways to enter the trade, and of course give you guys a recap of how the trade went. So should be a fun video, and I'll see you guys throughout. So pound Aussie has been in a bullish trend. We've come to a previous level of consolidation, right around here, and the market has essentially put it in a ceiling, right? We put in a bull flag pattern right here, which we would expect would break out to the upside. That did not happen. A lot of that is fundamental as well. We had a period where everyone was bullish to pound, and then the Bank of England came out and kind of switched the switched the sentiment on that, and people were bearish, so we saw a breakout of this channel. But what we're looking at right now is a retest of structure, right? So price action had made this floor while we were making our high and tight flag formation here. And then we broke through the floor back down to previous structure support, previous resistance, now acting as support. Now, price action is retesting this level, and this is going to be a zone where you can look for a selling opportunity. Essentially the same thing as a pullback trade where price has broken down, look for a pullback into this level of structure and a chance to trade it back down. I would go to retest previous structure lows right here for target ones, and then a continuation here, simply because although we have a rotation in trend, there's still we don't have a full bearish trend yet, and this market has been very bullish. So in a way, this is still kind of a counter trend trade. So I'd be a little bit more cautious than aggressive with this as far as target taking goes. But you can go down to your lower time frame here. You can see we're retesting the previous floor of this flag pattern, and we can kind of break down the ebbs and flows. Now you can see my box is already drawn here because I have a pretty good eye for this. But if you're just drawing this out, right, just go ahead and draw the ebbs and flows of price action, right? We kind of went here. This is way in the past, so it doesn't matter as much, but you guys should be practicing this stuff already, right? Drawing these lines out. We get up here, here's what our next move looks like, right? Boom, violation, lower low, lower close, outside return, right here. We know about kill zones. Where are we drawing our kill zones from? Our previous structure low right here to our previous outside return right there. That's going to be our kill zone for a potential short opportunity. And this isn't a bad level where we're at right now. For you guys that watch the day trading course I just put out as well, you can also start looking for maybe an RSI swap. So that that instance where we go from one extreme to the other. We go from a direct oversold position right here at our lows, this swing point, to overbought on our pullback. We could do so much with this, right? So we have the RSI swap, right? RSI swap. We can also have the RSI going overbought. Anything else you guys see there while we're talking about the RSI? Think from this high to this pullback, right? Lower highs, what do we have on the RSI? Higher highs, this is called hidden divergence. And of course, you can go through anything else in your CTS checklist as well. You can bring some fibs on from multiple levels, your swing high to swing low. Right there, you can bring it on for this intermediate move, swing high to swing low, look for Fibonacci confluence, right? You got 786 and the 50%. Right here, you have a bigger 618 lining up right there. You can even probably take, you have to go down to the hourly. Let's just go down one more time frame here. I haven't looked on the hourly yet, so let's see what this does. Do we have a one-to-one measured move here? Nope. Gonna be a little bit above that, but let's just see if that's a 1618 as well, Keel. Yeah, we're trading a little bit above it right now, but you had a 1618 one-to-one measure move, but that's past this point. But either way, you can see, right, a clear picture of where price action is at right at these lows. Start thinking about what is your reason for entry, and you can set yourself up with a pretty good tradable opportunity. Even if you're going to get stops above previous structure highs, let's say you were to enter right here, right? Even getting stops above these previous structure highs right there, that's going to be your safest place to put stops, obviously. You should easily, and again, this is going to depend on how you're shooting for targets. Everyone does it a little bit differently, but you should easily be able to get a one-to-one risk reward taking targets at a retest of previous structure lows. So two trades on the radar, both kind of longer term trades, but wanted to give you guys a little an early look at it just so you can prepare yourself. And I'll see you guys tomorrow in the live room. Until then, plan your trade your plan. Take care. So the Trading Edge is a video that my trading partner, Jason Grayson, and myself put out on a daily basis to our tier 1 trading clients. And the idea isn't to be like a signal service. If you guys know anything about me, you know that I am highly against signal services. I don't think there's anything wrong with signal services if you use them the way you're supposed to use them. But when you are trying to become educated and you're trying to use signal services, those two things just clash. So I think it's best to choose one or the other. Either learn how to trade yourself or have someone provide services for you that trade for you. But the point of the Trading Edge video is to provide a daily look at the different trading ideas that are on our radar and really relate that to the training, right? Many of our clients are going through the training courses, and well, if you've ever read a trading book or if you've ever seen a YouTube video, you know that typically we always look at the picture perfect examples because they make the best form of education. However, when you go to the live markets, the market isn't so pretty, and sometimes the picture perfect example is a little bit messy and it's hard to understand. So something that we want to do for our clients is we want to show them examples of the concepts that we're teaching them, show them what they look like in the live markets, and of course talk to them about how they can approach it. And of course, for traders that are more experienced, it provides more eyes on the markets. Maybe it's a chance for them to pick up on an idea that they may have missed before or gain confidence. I know many traders will leave me messages saying, hey Akil, I was looking at the same thing, but I wasn't quite sure about it. But after watching your video, I've got confidence, and I'm much more likely to take the trade because you were looking at the same thing as me. So that's big as well while you're going through that process of gaining confidence in your trading. So that was the Trading Edge video. And what we did next was, the next day was we revisited this opportunity in the live trading room and talked about a few different approaches of how you can get involved. We shall see. Okay, pound Aussie. Not a pair in my portfolio anymore as of 3 years now, but I like this area. You can see we topped off right here, put in a little consolidation. What do? broke to the low side. We're coming back up the previous structure. You can see the consolidation on your chart, can't you guys? Look at this candle. Can you guys visualize what these two candles look like on a lower time frame? Can you see it? Can you see it? Probably looks like a straight block of consolidation, right? Look at the move, right? Red candle, retracement, red candle, looks something like this. This is going to end up being a kill zone, right? Can you guys see this now? The visual. This is where having blow up my chart. This is where having like a line chart would come in handy. Look at that. Using a line chart, much better visual for you. I love candlesticks. Candlesticks give you a lot more information, but when you look at that pure movement of the market, guys, don't discount a line chart. This shows you where the market went. Boom, boom. Gives you that nice little kill zone. Essentially the exact same thing I drew out. Have any of you guys ever used a line chart at all? You're probably like, what the heck? What the heck just happened there? But again, if you know how to read a price chart, right? If you truly know how to read a price chart, there's no reason, guys. There's no excuse. And maybe I don't know. Maybe I'm talking to the wrong crowd here. But there's no excuse that you shouldn't see the similarity between this and this, right? Can anyone not see this? Right? If we know the basics on how candles move, right? We know that the red candle started up here and it ended down here, right? This is move number one. We know that the green candle started down here and ended up here. That's move number two. We know the next red candle started up here and ended down there. Yeah, no, am I off? Just give me an honest assessment of just basics, knowing where we open, basic open and closes, open extremes of where price action went. You can go wick to wick even. Okay. See? Those very simple concepts come in handy. The stuff that some of you guys, not all of you, but some of you guys kind of gloss over it. Ah, yeah, Keel, I know what a candlestick is. I don't even know about open, high, low, close. That stuff comes in handy. That's your foundation. That's that big textbook of knowledge in your brain that you always refer to when anything else comes up. Tony says, I was trying to see if X to A stood out and better in the candlestick chart. I would think they would, Tony. Again, if we go to a line chart. I would think they would. Yeah, I would think they would. I was going to a 240. You can see 240 chart. Here's what I was looking at earlier. We did do our RSI swap here. So we went from one extreme, RSI was oversold, and we went to overbought on our retracement, right? We're in that kill zone. You can see we had a candlestick. What does this red candlestick basically tell you? Maybe it's not textbook, but what does this red candlestick tell you? Is it bullish, bearish, or is it strong, weak, or neutral? Basically neutral, right? Neutral candlestick, you've got a wick to the upside, a wick to the downside. You've got to close somewhere in the middle half, right? Neutral candlestick. What's this next green one show you? What story does this tell you? Price tried to push up, right? Longer wicks to the upside, longer wicks to the upside. That means the bulls are trying to push up. Are they winning or are they getting beat back? They're getting beat back. What I thought we'd see earlier, and we still have 25 minutes, I thought we'd see a lower low, lower close, which would be a first strike entry for you guys, right? Lower low, lower close, first strike entry. do something like this. This is on the 4-hour time frame, by the way. Do something like this where you get your targets down here. You can get your stops above previous structure or whatever other rule you want to use, doesn't matter. And you've got yourself a nice little trade. 2 to 1 looks like. Maybe a little less than that. 1.5 to 1, 1 3/4 to 1. Nice aggressive trade setup. Now, if you did something like this, right? Say you waited for price action to go up. You waited for the market to go overbought, and you said, if price action goes overbought, then I go down to lower time frame, right? You had a double top. And now you have a 26.18 actually. But you see the double top right here? Boom. Retracement. Secondary top right here. Entry would have been right at 82.21. If you're looking at the same targets, you've got a nice setup where you're looking at this as an entry down to previous structure. Let's just call it right here. Boom. Stops either, again, you can go above the bigger level of structure if you want, which was somewhere up there, I believe. You're getting a little bit better risk reward. Or if you want to use an ATR stop, what would ATR stop give us? 27. Probably the same thing. 82.68. We'll give you a little bit less. So 60, 68. Is that right? 40, 50, 68, yeah. Oh, seems small. Something like this, even better. And look what you have. You're going to love this. 1, 2, 3, 4, 5. Does it get any better than this? 6 to 1. I see that it's a 26.18, yeah, because we broke and closed below. So here we talked about rules based earlier. Is this a triple top or a 26.18? Which essentially is it's the same thing anyway, but 26.18 because we had the break and close below. So that is something, I know there's this double top is going to be subjective. Some of you say it's a double top. Some of you may not see it as a double top. The question is whether this is a triple top or a 20, or whether or not this is a 26.18. Because it's rules based, because I identify this as a double top, right? We have a break and close below. We have a retest of the 618. By definition, that is a 26.18. But you can see subjectivity will still be in, is this a double top or not? And not every trader will agree, believe it or not. You could put 100 of us in a room. Guess what? 100 of us will not agree. However, if you put us under the pretense that this is a 26.18 or this is a double top, and the question is this a 26.18 or not? Well, that is very specifically rule based, right? Assuming we agree upon the former. And then you would have 100 out of 100 traders would agree, because you can't disagree with this, because this is strictly a 26.18 is strictly rules based. Make sense? That's an example of we're making it as rules based as possible. But at the foundational level, there is going to be subjectivity to it. Because you can't have a 26.18 without a double top or double bottom. Double top or double bottom. There is subjectivity to it. Anyway, 6 to 1 risk reward. That's pretty awesome. Let's go down to a lower time frame, 15-minute chart. You should get a better look at this 26.18 trade. You guys remember the pound Aussie from Tuesday's Trading Edge video? I don't know how many opportunities you want to get involved in this, right? We talked about coming into a previous structure shelf. Four-hour entry would have been a lower low, lower close right here. Excuse me, a little bit higher, right there. We talked about an even higher entry on the 1 hour, right? Doesn't look like it right now, but you had a double top, if you guys remember. You had a double top. You had the break and close below. You had a 26.18, right? So you had your lower low, lower close here. You had your double top here. You had your 26.18 here. You even had a retest the structure here. What else do you guys want? What else do you want? Good trade. There you go. Chris said bank 73 pips on the pound Aussie just before the news. Yeah. You guys want to see something cool? Look at that. 225 pips. $225. Now, unfortunately, this is in my demo account. Why? Because it's not a pair in my portfolio. So I can't trade it. Unfortunately. Oh, trust me, the temptation was there. You guys don't know how bad I wanted to, because no one would have known. I would have known, but like, I was very tempted to actually take the trade. Very, very tempted, because I really like this setup. I told you guys from the beginning of the week, I really like this setup. So in order, and this is a cool little trick now that I think about it, right? Because a lot of us, how many of you guys deal with temptation? The temptation to do something you're not supposed to do. You're supposed to wait for a lower low, lower close, and you see the market moving, and you know there's 5 minutes left until the candle closes, but the market's moving now, and then all it's doing is increasing your risk and decreasing your reward, and you just want to get in. Or you have a setup that you haven't tested yet, right? You just watched the Head and Shoulders training, and you know you're not supposed to be trading it yet, but you identified one, and it's just how it was, picture perfect, right? Those temptations are hard. We know what we're supposed to do. We just often don't do the right thing. And I'm talking to you guys. You guys are dedicated traders in here. Just imagine what the rest of the world is doing. Imagine what you were doing before you got involved with Tier 1 trading, right? You guys right now are locked in on the path to success. And by locked in on the path to success, I mean you are on a road that will take you to be a consistently profitable trader. Now, it's up to you on if you walk that road, if you try to take a shortcut and get eaten by an animal, right, on the outskirts. It's up to you on how fast you want to walk, how slow you want to walk, right? That's all up to you. But you are on the road to success. And you guys still deal with the temptation to do stuff you're not supposed to. Luckily, you have a community around you, right? You're not walking by yourself. You're walking as a group. And the group surrounding you is holding you accountable. So as Gabby looks over and she's like, yeah, I'm just going to do this, right? Phil's like, hey, Gabby, what are you about to do over there? Oh, nothing, Phil. Just let me enter at market. Well, I remember last week we talked, Gabby, and you said you had to wait for a lower low, lower close. Did you change your rules? Come on, Gabby. Come on. And you're like, right, whatever, right? So luckily you have that support, and that makes a massive difference. But something I found over the years is that when that temptation gets too big to trade or take a trade, take it in a demo account. Now I know if you're already trading demo, it doesn't help you any. But if you're a live trader, take it in a demo. It doesn't make you real money, but at least you get that feel of executing a trade, if that makes sense. And it helps a little bit. At least for me, it does. So again, this was a setup where this was a no-brainer. And by no-brainer, based on the conversation we had earlier, I have no idea if it's going to win or lose. But it was a setup which had a tremendous risk reward, as you guys saw on it. And it was a no-brainer, take it multiple times. Yet, again, rules are rules. This pair is currently not in my portfolio, right? It hasn't been in there for 3 years. So I did the next best thing, right? I took it on demo account, right? Doesn't hurt. It doesn't help my my account statement at the end of the month. But it eliminates some of that urge. And I'll come back. I got to do some more analysis on this. We'll probably come back and revisit this pair again for today's Trading Edge video and talk about the extended targets and whatnot. But yeah, cool situation. And I like these because if you were here all week, we tracked it. Did we not? We tracked it, and you got the good analysis pays off. Not every trade, but in the long run, good analysis pays off. So congrats to you guys that made a lot of bank off of this. Congrats. So good trade, as you can see, made a lot of our traders a good sum of money. And I know what some of you guys are thinking out there. Well, Akil, you should have just broken your rules just this once and captured that profit. And I'll tell you this, I thought about it. But at the end of the day, when I measure pain and pleasure, right? Pain comes from breaking my rules, not from missing a trade, not from taking a losing trade. It comes from breaking my rules, and pleasure comes from following my rules. And it may not seem like the right decision to many of you guys that are new, but when you've gone through what I've gone through, and that's the process of being a really bad trader for a long period of time because of stupid mistakes, you start to understand how much being disciplined matters. And becoming disciplined is the number one reason that I've been able to become a consistently profitable trader for all these years. Because before that, I was skilled at technical analysis, not as skilled as I am now, but I knew how to read a price chart. I had a trading strategy that had a positive expectancy. The big obstacle that stopped me from seeing consistent profits was me standing in my own way, breaking rules, right? And it would always start with a small rule break, like a moving of a target or a moving of a stop. And that would open the door to more and more and more trading mistakes. And that's a path that I never want to go back down again, really because I can't afford it, right? I'm in a position right now where my livelihood is based off of my trading. The mortgage is paid, the new car that we have to get. If you follow me on Instagram, you saw that we got into an accident, right? That's coming from trading profits. If I start making mistakes and I sabotage my trading, I'm essentially sabotaging my life and sabotaging the life of my loved ones. So bigger picture, it stinks, yes, but bigger picture, being disciplined and following your plan is going to have the greatest reward. Think long-term, not short-term. For you guys that saw my latest podcast episode, playing chess, not checkers, you got to have that mindset. So I'm going to flip over to the charts real quick, or to something, I don't know, but we're going to talk a little bit about my trading results, do a little bit of a comparison from the March results and show you where I'm at now. Just give me a few seconds to load up some of my data. So when I last spoke to you in, I think, end of March, early April, I told you that I was having a pretty good trading year. I was up about 13%. Typically, if you guys are new, I try to average 3% a month. I didn't trade January, so 13% between February and March was pretty darn good. However, I said that I was kind of batting out of my average, and that's not a pessimistic statement. Rather, I know myself as a trader. I'm extremely consistent. I produce around the same margin each and every year, so I kind of have a good feel on when my trading is going very well and a correction may happen, and also when my trading is going very poor and a correction may happen in the opposite direction. And I told you guys that I'm hitting at a high percentage. I was about 60 something percent, maybe 65. I'm typically about 55. A drawdown is probably coming soon. And lo and behold, April came and you can see the big dip in my equity curve. That was the drawdown. That was the correction. Now, to many traders, this is going to be a very scary moment, especially the first time you go through it, because drawdowns are very, very dark. It's like you're walking through this dark tunnel, or rather this, it's like you're drowning in the ocean and you're sinking lower and lower and lower. And we all know that there should be a bottom at some point, but you're afraid that you may drown before you hit the bottom, right? It's very difficult. However, if you continue to follow your plan, if you continue to be consistent in what you're doing, your feet will eventually touch the bottom. You will be able to push yourself back up, and you will be able to jump out that water to new equity highs. But it's a massive strain on the psyche. It's very, 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 very hard. And it's one of the reasons it's so important that you surround yourself with a positive environment instead of surrounding yourself in a place where people are encouraging you to take the wrong actions or stuff like that. But we hit a drawdown, or I hit a drawdown. And what's interesting about this drawdown is it wasn't really a bad streak, right? I've had streaks before where I've taken like 15 straight losses, right? Not fun at all, but I've had streaks like that. In April was a really slow month of trading. I only executed 10 trades in the month of April. And the win percentage really wasn't that bad, but when going back through the stats, I noticed that I had 2 trades that were essentially max loss trades, meaning I have a certain amount that I can risk per trade, and these 2 trades were basically at the ceiling of that risk, meaning I was risking almost one of them, the most I can risk on any given trade. The other one was close, and both happened to lose. So that's a fancy way of saying I took 2 really, really, really big losses. And that makes the curve a little bit, deceiving. It wasn't as bad as it seems. But as always, we trade through it. That's not my first rodeo. I've been through drawdowns more than I can count. My tablet's blowing up in the background. I've been through more drawdowns than I can count. I've been through all the pain. I'm very confident I will get through them. If you guys know my results from last year, I took a 17% drawdown, my biggest drawdown ever at the beginning of the year, and ended the year with one of my best trading years ever. So it all happens. And lo and behold, right, was able to kind of bottom out, find the ground here on the equity curve, and trading has been well ever since. And we've gone on to make new equity highs this month, starting to trade a little bit sideways now, but hopefully we can continue to push further and further. And right now I'm at about a 16% return on investment, and the max drawdown, which last month was a 3% max drawdown, has gone to 4% max drawdown. So still nothing to get scared about. If I can keep those numbers the entire year, I will be pretty happy. Now, what's interesting is the type of trades. Last month, I guess it was, we did a breakdown of the trades. I'm not going to do a full breakdown for you this year just because I know this video is already long, but you can see some of the numbers there. Last month or last time, the cipher was hitting about 83%. We're starting to come back down to earth with the cipher. I'm at about 78% right now. The Gartleys are the same. Bats have gone up a little bit, I think from 50 something last time to about 60 something. And then the same issue with the pound dollar. Last month, the whole deal was, the topic was, should I dump the pound dollar? Because this pair is bleeding me money. The pound dollar had lost me 526 pips. That was at the time, it was the only currency pair that was actually in the negative for me. I actually haven't had any new trades on the pound dollar, so it's still the same. So, nothing has changed there. Something that is interesting, though, is the cipher was my best performing strategy or technique last time. That has been jumped over massively by the little area that you see called Other. Now, Other is all of my structure-based trading, so trend continuation trading, range bar trading, double tops, double bottoms, divergences, stuff like that. Anything that's not an advanced pattern formation, kind of just pure price action trading. And I'm still 50% on that. Again, that's typically where I'm at with that type of trading. The difference is I was able to hit a few, not home run trades still, but I was able to hit a few trades with extended targets. And those few trades brought me a massive amount of profit. So now that structured based trading or price action trading has been my most profitable technique for 2018 so far. Outperforming, next is the bat pattern, outperforming that by about 3 times. So pretty cool to see the structure-based and price action trading kind of come back around and start hitting those extended targets. We did a good job at hitting normal targets through the first quarter of the year. We finally got some of those big winners and those big pushes, which I'm excited about because that's my favorite style of trading. So that's an update for you guys. Hopefully this video wasn't too long. If you like what you see, do me a favor, hit that like button. Please share this across social media. That's a massive help. Remember, if you didn't see that process of trading free training already, there's a link in the description box below. And of course, if you want to sign up with us and work with us on a daily basis, you can do so by heading over to www.tier1trading.com and start your membership. So until next time, traders, plan your trade, trade your plan. I hope you have a great weekend, and I wish you the best of luck in your trading journey. Take care.